even when inflation was high, gold really did not respond. And it's almost exactly what's going on right now. Gold's not responding yet. But if you look at the second half of that inflationary period, gold really caught fire and surged to the upside.
Seems like a pretty exciting year you're expecting for the metals. You're on record saying that we could see $3,000 gold in 2022. Your perspective on where we're headed?
Yeah, so I'm still in that camp on gold. To me, it's one of those scenarios where I'm mirroring the mid 70s to mid 80s inflationary period in the U.S. And I looked at the gold chart there, and we started out in that period where even when inflation was high, gold really did not respond. And it's almost exactly what's going on right now. Gold's not responding yet. But if you look at the second half of that inflationary period, gold really caught fire and surged to the upside. And again, if you look at kind of the way things have gone with cryptocurrency and the stock market, money has flowed into those assets as people have been chasing returns, and they have been going higher and higher. Well, if we're at a pivot point where the stock market may start to reverse and cryptocurrency has already seen a big fall, my guess is money is going to start heading into kind of the laggards, the value plays. And I look at gold as one of those value plays. So I'm still watching gold here. And if I show my chart here, I'll show you guys what I'm looking at. You still have a very defined kind of, trend line here connecting these highs. And that's still what I'm watching. If you can get a breakout above this line here on the GLD, and it looks to be around the 172 to 173 level on the GLD, I think you very quickly go up and retest the all-time high on gold on the GLD. That's around 193. At that point, you'll see some resistance, but I do think eventually it's going to break higher. As you see, just this inflation bug is not going to go away in the near term. And you can already see the Fed. I mean, we haven't talked about the Fed yet, but the Fed is already starting to panic, right? They're already tapering. They're talking about interest rate hikes. And now, as of the minutes yesterday, we saw them talking about, rolling off their balance sheet. So that's freaking the market out. And again, that's showing that the Fed is concerned quite a bit.
It's very interesting because I'm getting a lot of mixed perspectives on what we're going to see in 2022 for gold. Some people are not as bullish. If you wanted to boil it down for our viewers, like what are maybe the top 3 reasons you're bullish on gold this year?
So number one is the bull flag on a technical basis. So if you look at the gold chart, we had that high that occurred kind of it was mid to late 2020. And that was a big surge up. I think on the gold chart, we had gone from something like $1,200 an ounce all the way over $2,000 an ounce. Since that period, you've seen a sideways to slight negative move that has lasted now basically a full year. That to me is a classic technical setup. It's called a bull flag, and you usually see those play out strongly with major moves to the upside. The second factor I would look at is basically the Federal Reserve and the government, right? So the Fed is talking a tough game. They're talking about how, they're going to get inflation under control. But if history has taught us anything, it's that as soon as, they'll start to get things under control. And as soon as we see a black swan event, something unexpected, the stock market tumbles by 25%, unemployment goes up, they only have one play in their playbook, and that's to make policy lenient again, to print more money so that the economy starts revving its engine again. That printing of money longer term especially is going to be very, very bullish for gold. And then I would just say also, you just have to look at the cycle. And I talked about that just before. If you look at kind of the higher inflation cycle from the 70s to 80s, this is the exact same playbook playing out.
As for the stock market, I'm also getting different perspectives from a lot of our guests. Some people are thinking we're going to see really a blow off top moment, a melt up in the stock market before a crash. Other people are saying, no, we've already seen that and we're headed lower this year. We're headed for a crash this year. Your perspective on where we are right now?
Yeah, so I mean, for me, I'm not sure if I'm in the crash camp where we see like 30 or 40% downside in the stock market. What I do think is we will at least have a 20% correction in 2022, maybe more. But again, if you think about it logically, right? So if you look at the stock market, and this is the chart of the S&P 500 of the spiders, and you can see we've been trading in this channel, right? So basically going back, here's your COVID dip right here. All right. And what happened right around this time? The Federal Reserve comes out and says, hey, we are going to print and push $120 billion into the system every single month. That equates to $1.5 trillion a year. And in addition, we're going to keep interest rates at zero. And additionally, we're going to expand our balance sheet. And then the U.S. government is going to come out and print lots of money and send the Americans checks, right? We're going to send all the Americans, or at least the ones that qualify, multiple checks. So again, does it make sense that we had this amazing kind of liquidity expansion that drove the S&P up? It absolutely does. Well, on that same front, you have to be able to be objective and say, okay, the Fed is now telling us that they're taking some of this away. All right. The government is now, you're even seeing the inability for Biden to pass his Build Back Better plan. So that's not extra money going into the system. So you're seeing this situation where it's almost like a little bit of an unwind. And it only makes sense to me to see the stock market, which has been driven by that, unwind as well. So I'm in the camp that at some point, we very clear channel here. At some point, we do break below the channel. And then I think, again, my guess is your downside target for 2022 is this line right here, which was your pre-COVID high. And I would guess that, again, we would trade down there. And that's, I think that's around 20, maybe about 25% to the downside from current levels here on the chart.
So it does seem like, quite a big crash based on what we've seen in the last couple of years.
Yeah, I do think so. Again, it's not going to be kind of the 2008, 2009, 65% drop. But I do think that, again, especially if inflation is not going away and the Federal Reserve is being more forced to kind of take this stimulus away faster and faster, I do think that that's a good possibility. I also think that, you're already seeing it in certain stocks. It's been absolutely remarkable as a trader and a swing trader to see some of the drops that we've seen on stocks. I just got to show you guys some of these charts. So, some of these high flyers like Cloudflare, this stock was one of the biggest runners in most of 2021. And just in the last month, it's gone from $225 down to $100. That's an incredible reduction of its market cap. And same thing with SE. Here you had one of this most amazing runs to the upside. And then again, it goes from $375 to a low today of $180 in basically 1 month period. So a lot of the market to me is already in a bear market. Again, you could go to other stocks too. We know what Peloton, right? Peloton speaks for itself, what that stock's done. But so many, I would say like 70% or maybe 60 to 70% of the stock market is already in a bear market. And you're now seeing Apple, Microsoft, the big players that make up 50% of the NASDAQ 100, the S&P 500, they're the only reason we haven't seen a bigger correction in the stock market. So again, I would say this, the underlying factors in the stock market are very weak right now. We're being carried up by a matter of a handful of stocks that cannot last. So at some point, Apple, and we've even seen Microsoft recently start to take a little bit of a tumble. But if those stocks start to go, the S&P and the NASDAQ will see a big, big decline.
Before I let you go, I did want to touch on the precious metal markets today. We're seeing quite a bit of a drop in silver. Silver, to the low 22 level. Your perspective on the current drop we're seeing right now, and it doesn't seem like this means anything long term. Is that right?
Yeah, I would say that's correct. But basically, yeah, I'm in that camp where it's a big drop. But again, the technicals are telling me that this is the important line right now, which is on silver. I guess that's right around just below $22 per ounce on silver. So even though we're having a big drop on a technical basis, as long as this line holds, that's okay. Now, if this line breaks, then there's a very defined secondary line here just below $20, around $19.50, that would be interesting as a buying opportunity. And that's kind of, believe it or not, that's where I'm actually looking to buy silver. So I have exposure in gold. I have some gold miners. I have some GDX, some GLD. I have physical gold. I do have some physical silver, but I haven't really gone into the swing trading side on silver yet, as I'm more waiting for the level, that 1950 on silver to hit. But yeah, again, the key is, as big as a drop as you're seeing in gold and silver, unless it breaks key levels, you don't have to worry too much about it in the near term.